Welcome back. In today's video, we're going to be exploring why the internet computer ecosystem was sued by investors. The case is now over, at least for the time being, but we're going to be exploring why these investors were upset. I'm going to give you guys my opinions on the whole situation involving the internet computer protocol back when it was launched in 2021. And really where the difference between where we were then and where we are now from an ecosystem perspective, a blockchain perspective, an integration perspective, and more importantly, a price movement perspective, specifically getting into the internet computer cryptocurrency. We're also going to be talking about a lot of other topics in today's video, including Ethereum treasury companies, other crypto and altcoin treasury companies, what the SEC is doing, where the market is, and much, much more. We have a lot to discuss in today's video. Make sure you guys are subscribed to the channel. That way you never miss a new video. Sometimes we do deep dives into individual cryptos, like we're going to be doing in certain parts of this video. And other times we just talk about the macro financial environment, zooming out and understanding where we are in the cycle and hopefully making good investment decisions for our portfolios. So join the channel, hit the subscribe button, give the video a thumbs up. Let me know your comments down below. And we're going to be starting right here with mega investor Ray Dalio suggesting putting 15% in Bitcoin gold amid the US debt doom loop. And in a little bit, we're going to be getting into the Internet Computer Protocol and Dfinity lawsuit that really raised into question the genesis or the beginning of the internet computer and the precipitous fall of the price of the crypto. And again, I'm going to give you guys my insight because I was there. We've been watching internet computers since it launched back in 2021. And we went from mega bearish at the beginning with a precipitous drop from $700 effectively down to $3. But then we called the bottom literally to the penny on this channel. We called the bottom to the penny of internet computer in 2023 being $2.93. And it went up to $20 after that, almost an 8 or 9x. So we got a lot to break down in today's video and a lot to discuss. Give the video a thumbs up, hit the subscribe button, and let's get right into it. So we're going to start right here with hedge fund manager and mega investor Ray Dalio. He is now recommending a 15% portfolio allocation into Bitcoin or gold to optimize for the best return to risk ratio in light of America's crippling debt problem and currency devaluation. Now, I want you guys to remember everything that we're going to be talking about in this portion of the video. Most of your friends, family, coworkers, neighbors, they have no idea about any of this. They don't understand currency devaluation. They may understand inflation to a degree, but they don't understand how it's occurring. They don't understand that the Federal Reserve is printing and printing and printing and printing and printing, and that they're never going to stop, right? We heard about DOGE, the Department of Government Efficiency, going into different departments, and I do think that they did a lot of good work in just getting these bureaucracies, right? The agencies within the government to question what they're spending money on, which I don't think that they were doing prior. And even if just that questioning what they're spending money on can reduce some of the spending and waste, I think it could be really good for the government. I mean, it's the same thing like a company calls in consultants and the consultants are like, well, why are you spending money on this? Why are you spending money on this? Why aren't you spending money on this? I mean, we heard from Elon Musk that to retire in the federal government, it would take like 4 weeks and people would have to go into an underground cave and fill out 90 pages of paperwork instead of just clicking a button on a computer that says, boom, this person retired, right? I mean, maybe it's to create jobs, right? And for the sustainability of those jobs. But at some point, you got to question, like, can we do this more efficiently? And that's what they're doing. But again, Doge is effectively no more. And, they're not cutting. They're not cutting what they're going to be spending. They're spending more. The budget that just passed, it's more than it was. And it will continue to be more and more and more and more. And so when you understand that, you can relate this to why all these companies are buying Bitcoin, why people are looking at Bitcoin as a hedge against inflation. And specifically longer term, right? Way longer than what our time horizon is, right? Most of us want to become somewhat wealthy and have some extra money on the side before we're 90 years old, right? And so we can't follow what these companies necessarily are doing because they're thinking about 100 years from now, 50 years from now, where the company's going to be. We are thinking about how do we pay off our debt now? How do I buy a house now? How can I take care of my family now, not in 50 years, right? And so this is a big difference. Anyway, Ray Dalio said if you're optimizing your portfolio for the best return to risk ratio, you would have about 15% of your money in gold or Bitcoin. He said that he has some Bitcoin, but not much, and is strongly preferring gold to Bitcoin. That's very interesting. Because also remember, they were going to do an audit of the gold that the US government holds, and we didn't see any of that. And so I don't know whether they have the gold or not because there was no audit. So yeah, that's interesting. He said the issue is the devaluation of the money and that the government will likely need to issue another $12 trillion worth of treasuries over the next year to service the mounting debt. Remember, the US is currently going into $1 trillion of debt every 90 days, right? So that's, I'm doing the math while I'm typing. That's 4 times 1 trillion is $4 trillion per year at a minimum. And when I started this channel in 2018, the US national debt was at $19 trillion. We are double. Just in the amount of time I made this channel, I'm not even at 100,000 subscribers yet, which hurts my heart. So make sure you guys are subscribed to the channel. But think about that. In just the time that I've had this channel, we have doubled in debt. It took us 250, 270 years to get to $19 trillion. And it took us 8 years to go from 19 trillion to 37 or 38 trillion dollars and doubling it. What do you think is going to happen over the next 8 years? If this doubles again, we're going to be at $70 trillion in debt. This is unfathomable. And by the way, most people, again, they don't understand this whole mechanism and how it's devaluing your dollar. And this is why people are moving into crypto. And by the way, crypto is not even doing that well because I believe that the economy is not doing that well, right? The Federal Reserve keeps saying we're not going to cut, and everyone's like, well, they have to cut. The president's saying we're going to fire you if you don't cut. And you know what the Federal Reserve came out and did? We're not cutting. Meanwhile, Robinhood beats their Q2 expectations despite sagging crypto revenue. Why are they getting sagging crypto revenue if the crypto industry is in the midst of a bull market, right? And again, this is going to bring us to the internet computer lawsuit situation because really the reason the price declined so precipitously with internet computer, this is just an example of end stages of a bull market, right? And it goes across the board, and it is happening in this cycle, and it's going to happen even more in this cycle in 2025. It's going to happen in 2028. It's going to happen in 2032. We're going to have these boom and busts. You're going to have cryptos popping up out of nowhere. Well, are we having cryptos popping up out of nowhere? Absolutely. Hyperliquid popped up out of nowhere in the top 15. Really the top 10 if you remove the stable coins. Sui blockchain pops up in the top 10. Nobody heard about it before, being pumped by billionaires, no actual partnerships, no real technological breakthroughs, but it's there. And so this idea that we're not going to see precipitous falls in crypto or in stocks is completely ridiculous. And by the way, it also says these treasury companies that are buying Bitcoin or Ethereum and putting it on their balance sheet and then you could go buy the stock, that seems to be what people are buying. And stock trading is not really that profitable compared to crypto trading. So let's understand what happened here. Robinhood posted stronger than expected performance, surpassing analyst expectations despite a cool down in revenue from crypto trading. Q2, right? That's April, May, and June of 2025. All the markets were moving higher. And meanwhile, they had a cool down in revenue from crypto trading. Can you believe that? It's very interesting. Anyway, they go on and say, Robinhood said they generated $160 million in crypto trading revenue during the second quarter, a 98% increase from a year prior. However, this fell quarter over quarter from $252 million. So remember, beginning of the year, that's when everything was pumping. end of 2024 into 2025. And then everything just fell off a cliff. We talked about this with Solana. We talked about this with the kind of the market getting ahead of itself on what the president was going to do. So this is something to keep in mind. We're already in Q2. Robinhood is, I mean, that's almost a 50% drop. It's like a 40% drop in revenue in just 1 quarter. 1 quarter, 40% drop. Meanwhile, the SEC is approving in-kind redemptions for all spot Bitcoin and Ethereum ETFs. And a lot of crypto industry is cheering this on, saying, wow, this is great, this is amazing. But it's really not. Because these in-kind redemptions, they limit the volume on the network. So let me explain. So previously, let's say an ETF, a Bitcoin ETF, let's say the BlackRock Bitcoin ETF, they had about $10 million in sales. What before had to occur was they would have to sell the Bitcoin, $10 million worth, and get the cash. Now, what they can do is they can redeem it in Bitcoin. So I go to BlackRock and I say, hey, I have 1 share of BlackRock Bitcoin, and I want to redeem this for the Bitcoin. And obviously, they're not doing this with like individuals. They're doing this really more in a corporate and high level thing. But where you would normally have 2 transactions, right? You would have one going to cash and one going out of cash into the buying. Now you just have a swap. And so that's 2 transactions less, or 1 transaction less, because now you're just swapping from Bitcoin to Bitcoin, from ETF Bitcoin to regular Bitcoin. Previously, you would have to go to cash and then buy the Bitcoin in cash. So this does create tax incentives, from my understanding, and also it's just easier for these ETF issuers to kind of deal with this. But from a price and volume perspective, it's actually not that bullish. It really is not. Anyway, we're now also hearing about other altcoins getting chosen for treasury firms. So it's not just Bitcoin treasury companies anymore or Ethereum treasury companies. And by the way, these are both growing. I mean, if you go to strategic ETHreserve.xyz, you can see all of the actual purchasing of Ethereum from publicly traded companies. You can go to bitcointreasuries.org and see all the Bitcoin ones as well. And yeah, this is very interesting because now we have another company called CEA Industries. They're building a $500 million crypto treasury by embracing Binance launch BNB. So again, where are we in the cycle, right? We went from Bitcoin treasury companies to Ethereum treasury companies to Solana treasury companies. Actually, Solana may have come before Ethereum, but either way, now we have BNB treasury companies. This is end cycle. This is these companies trying to capture the upside, limit the downside in the midst of a bull run. And these are indicators, as I have explained last year. If you look at my videos, I said, we don't know that we're in a bull market until it's over. The top of the bull market until it's over, just like we don't know we're at the bottom of the bear market until it's over. But you get signals. And for me, the rush of all these companies to copy what MicroStrategy did, to copy now what the Ethereum treasury companies are doing, there should be no rush. And I've explained this before, they're all buying the top of the market. Even if these are private sales and they're just wallet transfers and they're getting shares of the company as payment, it doesn't matter. This is all, it seems like FOMO, fear of missing out. Like, we got to get this BNB, get as much money as possible into BNB, into this treasury company now. And I'm like, why are they trying to do this at the top of the market? I mean, we even see crypto, the crypto ecosystems trying to do this, right? We heard Cardano wants to sell, something like, I think $500 million, something like that, of the treasury in ADA and move it into Bitcoin at the top of the market. This is absurd. Now, here's the deal. If Cardano really wanted to do this, what Cardano should be doing is they should be selling the ADA now, holding the cash until the bear market, and then buying the Bitcoin. This would make ADA's ecosystem a powerhouse in the next cycle, because not only are you investing in ADA and the Cardano ecosystem, which many would say is not investable, including myself, If they have a large quantity of Bitcoin, right? If they have, let's say they liquidate $500 million worth of ADA in at these prices, okay? So now they have $500 million. And let's say they wait for the bear market. And let's say Bitcoin hits $70,000 and then they say we're buying. So 70,000 into 500 million would be 7,000 Bitcoin. Compared to now, it would be like 3 or 4,000 Bitcoin. So you go into the next cycle with 7,142 Bitcoin, and you bought it at $70,000, and Bitcoin, let's say, is peaking at $500,000. Let's just say in the next cycle, that's 5x from where we are right now, or 4x from where we are. So let's just say $500,000. So then we multiply this 7,000 Bitcoin times $500,000. And that would mean the Cardano ecosystem was able to convert their Bitcoin into $3.5 billion, 500 million into $3.5 billion. And so I think that would potentially save Cardano from exiting the top 10, but they would have to do this over a long period of time, and it may not work. But just buying the Bitcoin at the top of the market, I mean, this is, guys, this is bearish. And so we're seeing Solana doing the same thing. Solana treasury company Upexi is entering into a $500 million line of credit agreement to fund additional Solana token buys. So there is a thesis in this cycle that the Bitcoin and crypto drop in a bear market will be less than these treasury companies. And there is a lot to say about that, right? Because we know that a lot of these treasury companies are trading at a premium to what they're actually holding in the crypto. So their drop could be, 60% when Bitcoin or their underlying asset is only a 40% drop because of that premium. But that brings us to Dfinity. Now, Dfinity is not being sued currently, from my understanding, but this was back from earlier in the year, right? In March. Dfinity misleading token distribution and market manipulation case. Now, keep in mind, a California judge dismissed this lawsuit for being time barred, basically saying that they sued Dfinity too late after they're saying that they were rug pulled, I guess you could say, right? But the case was dismissed earlier in 2025, but I think it goes into what happened with the token distribution. And by the way, there's a lot of people in crypto that don't fully understand how internet computers price went from $700, $800 to where we are today at $5, right? Because this is potentially the largest drop in the history of crypto from a coin that basically started at these high levels and came crashing down. But why did this happen? Well, first, let's understand what the case said, right? Why they were suing Dfinity. Because, by the way, I would imagine we're going to see MicroStrategy being sued, all of these Bitcoin treasury companies going to be sued in the bear market because the prices are going to go down and people are buying this dream that the prices will never go down. And by the way, Michael Saylor's going on TV and saying, oh, no, we're never going to have a bear market again. It's like, what? Of course we're going to have a bear market, And by the way, I mean, it's Michael Saylor's job to talk positively about his stock and what they're investing in. But to say that there's no bear market, I mean, come on. Anyway, so in May of 2021, Dfinity launched the Internet Computer Token, claiming it would power a decentralized global computing platform. The company told investors of ICP that they carefully limited supply and a fair distribution model. At launch, ICP was valued over $400 and briefly had a market cap of over $35 billion. Now, according to the suit, right, again, this has not been proven, Dfinity secretly allocated large amounts of ICP to insiders and early backers while limiting access for retail investors. At the same time, Dfinity used a complex system of transfer restrictions and centralized controls to offload tokens while preventing regular buyers from selling. In the weeks following the launch, the price of Internet Computer Protocol collapsed by more than 90%. Investors later discovered that Dfinity had released far more tokens into circulation than publicly disclosed, and that its foundation controlled many of the wallets selling ICP at these inflated prices. Based on these events, the investors filed a lawsuit against Dfinity, claiming that they secretly inflated circulating supply of ICP while assuring investors of a limited release. It misled the public about the tokenomics and failed to register the ICP token as a security. By the way, it's not a security, in my opinion. And based on no lawsuits from the SEC, probably not from the SEC either. And that they use centralized control over token distribution to benefit insiders and early backers. Now, again, the lawsuit was dismissed, but I think that there's still a lot of, just reading my comments, reading the sentiment online, there's still a lot of people who believe that Dfinity wronged the ecosystem. So let's break it all down, because this is important to talk about, especially personally as an investor, somebody who also covers this protocol quite often. I think it's important to discuss these things and understand like why the price dropped like this. So number one, we are now at $5, okay? The price didn't go up at all until we hit this $2.93. Like that was the macro bottom for the coin. But there's a few things to take into account here. Number one, a lot of investors, especially early investors in these coins, they don't understand the tokenomics. They don't read into the tokenomics. They don't question the tokenomics. One of the things that we talk about on this channel is like solid investments and solid researching of investments. A lot of people do not do this. And the fact that, first of all, Internet Computer was launching on Coinbase, so that gave a lot of credibility to the ecosystem. Now, I don't know whether Dfinity manipulated the coins or not, and at this point in time, I don't think that it matters because we're a full cycle beyond that. We're at all-time record lows. It wouldn't make sense financially for them to continue that process if they were doing it before and if they could still do it today. So that's number one. Number two, I don't know who these investors are, and I don't know why they would invest, right? As we've covered on previous videos, there's people who even watch my videos that bought in at $400, $500, $100, and they didn't know any better, right? Does that mean that Dfinity wronged them? Personally, I believe that FTX and Alameda were more of an impact on the price of Internet Computer than potentially token dumping. It's possible that they were dumping tokens as well. It's possible that the tokens that they were dumping were the reason the price fell so precipitously and had nothing to do with FTX. But I can't see that as being the only reason, right? I don't know that Coinbase, and again, maybe this is putting too much credence into Coinbase, but I don't know that they would launch a coin, right? Because this is very rare, especially in 2020 and 2021, for Coinbase to list a coin at launch. Typically, they would wait. And so the fact that they were launching the coin on the Coinbase exchange at launch gave it some credibility. And this is why I think that FTX and Alameda, they went in and created perpetual futures to crash the price of the coin. They didn't list Internet Computer. They only listed the derivative of Internet Computer. And so we know that they were counter trading everything that wasn't Solana or FTT token. So this could have been part of the drop. But part of the reason that I'm bringing this lawsuit up is because I am seeing a lot of conversation about the token distribution. And I don't really think that it matters anymore. Because at the end of the day, the coins in circulation right now are the coins in circulation right now. And does Dfinity and Dfinity insiders probably have a large portion of it? Yeah, it's highly likely that they do. As with any new project that comes out, the coins are not just going to be automatically in your wallet, right? They're going to be in the centralized wallets of people who created the ecosystem. And then they're going to be distributed over the course of time. This is why I've always said on this channel, especially in the last cycle and with Internet Computer, don't buy when it first launches, because we normally would see a pump and then a dump with any coin that launches on an exchange. But here's the deal. If you were watching my videos back in 2021, you were not buying Internet Computer coins. I wasn't buying Internet Computer coins. In fact, I was warning against buying Internet Computer coins because I thought Internet Computer was a rug pull. I thought the insiders were selling. Then we found out about FTX. Still thought the insiders were selling. And so But where are we today? Dfinity has not left the room. Dominic, the founder, has not left the room. In fact, they continued regardless of the price collapse, which people are assuming they did to themselves while they're still creating products today and trying to advance the vision of the world computer, and especially with the AI implementations that we've been seeing more recently. There is the tokenomics today are well understood and clear versus when it first came out. I remember when they launched, it was like $250. Then the day after, it went to 400. The day after that, I went to 800. And I'm like, I was making videos. I'm like, guys, I don't know how high this is going to go, but I would not mess with this. Does not seem like a normal launch of a coin going up that high. Especially normally when you have a coin launching, right? There's going to be very limited supply in the open market. And so, yeah, you'll see a potential squeeze to the upside and then a dump, right? That's the pump and dump that people say, well, insiders were selling. It's like, where do you think the coins were coming from? Right? They didn't just appear out of nowhere. They don't just end up in your wallet. You have to buy it. So you're buying it from somebody. So that means somebody's selling you their coin. That's what went on. But I told my viewers, let's wait for $250 again. We waited for $250. I said, let's wait till $100. We waited till $100. I said, let's wait till $75. And then when it went below $75, I said, guys, this is not investable until there's a bottom, until there's a floor on this price. Sure enough, there was a floor. It was just multiple years later. And the floor was created right here in 2023. And I remember in September of 2023, I told my viewers, I said, this is the macro bottom so far for Internet Computer. And while Internet Computer could go lower, I believed it was going higher. And sure enough, it did. $2.93 at the low. That's where we clocked in. Boom, all the way up to $20, right? An 8x over the course of 6 to 8 months. But if you bought at that top, at that $20, which many people did, and now we're down to $5, who are you going to blame? You're going to say Cryptoviser told me to buy it? What? I don't even know who you are. You're going to say Dfinity sold their coins? It's like, based on what? Cryptos are going to go up. Cryptos are going to go down. On the upside, if you don't sell, that is your fault. Period. Just like if you're going to buy a car and you have a really good car deal and you're like, you know what? I think I'm going to get a lower price at the next car dealership. So you go to the next car dealership, they don't give you a lower price. You go back to the original dealership and they say, well, sorry, we already sold that car. And so you being greedy, already getting a good deal, saying, you know what? I'm going to save another $200 or $2,000 or whatever it is, right? You're buying a $50,000 car and you're like, I'm going to go to another dealership. I'm going to get these guys for $750. Like, I'm going to get a better deal. And then I'm going to come back to this one and I'm going to get an even better deal instead of just taking the car, right? Yeah, you could have saved $750. Could have, but you didn't. And now you don't have any deal, right? Now, granted, you can go look for another car, go look for another deal. It's the same thing in these markets. When the markets go up, if you are not capitalizing on that, that's your fault. It really is. Because every coin has gone up since the bottom. Now, I'm not saying the people who bought at $100, $200, $300 that it's their fault. Honestly, in the mania of the top of the market, which it was launched effectively at the top of the market, this was around the time that the Dogecoin fiasco was going on, where people thought Dogecoin was going to hit $1, and it didn't, because the smart money sold before $1. Because if everyone's waiting for $1, it's never going to hit $1, because people are going to sell before that. Same thing here. But either way, we're in a different cycle now, right? We can't keep focusing on, oh, but Cryptoviser, I lost money on this trade. Oh my God, this coin was a rug pull. It's like, guys, you're going to lose money on trades, right? That's the whole point of these markets. You're never going to win 100% of the time. It's the same thing like people say, well, most businesses fail in their first year. It's like, okay, but if you don't try, you'll never fail. And if you don't keep trying, you'll never succeed. So if you take that first failure and just like, you know what, it is what it is. I lost money in trading, which a lot of people do, by the way. They'll buy Bitcoin at the top of the market because everybody's talking about it. It's all over social media. Their friends tell them to buy. They buy at the top of the market without doing any research, without really understanding what they're buying. And then the market goes down and then they're like, I got rug pulled. It's like, no, you just didn't invest the way that you should be investing by doing your own research. And so whenever you're investing in anything, whether it's internet, computer, crypto, or whatever, number one, you have to do your research. Number two, you have to understand the tokenomics. Number three, you have to understand there are going to be people who are going to make a lot more money than you, period. They've been in it longer. They're insiders. They're getting crypto for free by working. Whatever they're doing, there's going to be people who are going to make more money than you. You cannot compare your portfolio to somebody else's portfolio. You can lose 99 trades out of 100, and one trade can offset all of those losses. And so this is the way that you have to look at investing in these markets. Internet Computer is not the only project that has been sued, and it's not going to be the only project that is sued in the future. There's going to always be investors that lose money and blame everybody else. But at the end of the day, you are making the decision to invest. You are making the decision to put your money in something. Now, if there's fraud involved, right, and they're telling you, oh, we're buying all this Bitcoin, and then we find out that a company doesn't actually have any Bitcoin, well, that's a different story, right? That's fraud. But when we're talking about these cryptos that are launching tokens and the prices are very volatile, and you're upset that you didn't do well, instead of just moving on, right? Because there are going to be trades that are not good. And when we actually look at the tokenomics of the Internet Computer, which they, by the way, they post on the dashboard, what you can see is that there is a large quantity of coins that are locked in staking. Some of these may be insiders, some of them may not be. But I'm looking at the building, right? Because even, major companies, right? Sometimes the CEO owns 40% of the stock or 50% of the voting rights for the stock. Does that mean that it's not fair for you? Then don't invest in it, right? The market is not going to move for you. You have to move with the market. This is where a lot of people get this messed up. And so what I do whenever I'm making an investment in a coin, especially newer cryptos, is I'm doing full analysis. And that's what we do right here on the channel. So make sure you guys are subscribed. That way you don't miss these videos. But I can guarantee you, there are stocks. I mean, there's company, we talk about Bitfarms. Bitfarms has been sued by lawyers saying that they caused material losses for investors because the price of the stock went down. Like, this is just part of how the market operates. But just looking at a lawsuit and saying, well, they misled and they manipulated the market, maybe they did. I don't know the answer to this question because there was a lot of weird stuff that happened in the top of the market, and especially with the Internet Computer price when it first launched. But we can't do anything about that now. We are looking at the market in front of us, not the market that we want. And the market that I see is that Internet Computer is the only blockchain that is implementing artificial intelligence, right? Granted, there's still a lot of work that needs to be done. They need to get the AI on chain. They need it computing and housed and hosted on chain. They don't have that just yet. We need large scale implementations of this technology or capability or usage from large banks or institutions, which it seems like they're going to be getting. And so focusing on, 4 years ago, they brought the coin from $700 down to $2. You're never going to make money that way, right? It's the same thing like, well, Satoshi has 1 million Bitcoin in his wallet. Is that a risk to the whole ecosystem? Of course it is. Do people care? No. Michael Saylor's MicroStrategy has almost as much as the Satoshi wallet. Are people scared? No, they're the most bullish they've ever been. And so the sentiment in the market can also determine the movement of the prices. And that has nothing to do with the fundamental technology or capability of the actual chain itself. And so this is where you have to be able to separate what is noise and what is signal. And to me, seeing Robinhood having basically half the revenue that they had in Q2 than they had in Q1, huge red flag for the market. Seeing Ray Dalio saying 15% in Bitcoin or gold, but he believes that gold is a better investment, another red flag. SEC approving in-kind redemptions. While people will look at this as bullish, I look at this as a red flag for the market. Now the companies everybody's chasing, right? Instead of focusing on crypto, everybody's chasing these treasury companies. This is the next best thing, right? It's dangling carrot. Come and get this company, buy our company. We're going to buy more crypto. We're going to buy more crypto. It's like, why don't you just buy the crypto directly then? Why are you buying a company that's buying the crypto that you have no control over? And by the way, these companies are going to lose a lot of money in a bear market. And what are people going to do? They're going to start suing all these crypto companies. And by the way, that furthers the decline, right? If a company keeps getting sued and you're still holding the shares, how do you think that's going to be a positive thing for the company? But they're all doing this. And a lot of these companies are doing this with debt. And it seems like nobody can see the risks. The same way nobody saw the risks of an internet computer starting at $700 and dropping down precipitously. People kept buying the dip, buy the dip, buy the dip, buy the dip, buy the dip. And by the way, we're at the same point in the cycle for Bitcoin when I'm recording this video in the second half of 2025. Bitcoin can barely maintain $120,000. The Bitcoin treasury narrative is starting to kind of fall off because all these companies are just MicroStrategy. They have Stride, Strike, Strife, and now they just created Stretch. So they have 4 debt facilities. And they keep creating more debt facilities because the previous debt facility they can't raise enough money for. And people are like, no, buy now. This is the most bullish we've ever been. We haven't even started the bull market. So a lot of the same things that we saw in the previous cycle, the same reasons that Dfinity was sued, whether true or not, doesn't matter, right? The bottom line is investors felt like they were done wrong. But the investors are not looking at, well, what did we do wrong? What did I do wrong as an investor? Maybe I didn't understand the tokenomics. Because if they were dumping on the market, you should be able to know that. You should be able to know that. It's the same thing like all of these Bitcoin treasury companies. You know, people are saying, but Cryptoviser, they're buying all this Bitcoin. No. They're not buying, they bought. People are like, BlackRock is buying hundreds of billions of Bitcoin. No. They already bought them. They're not buying them constantly. MicroStrategy is. BlackRock is not. GameStop bought $500 million in Bitcoin. And go on social media, just type in GameStop Bitcoin. You're going to see post after post after post. GameStop is buying Bitcoin. Get in now. GameStop is going to continue to buy Bitcoin. It's like, what? They bought once. SpaceX bought once 4 or 5 years ago. They haven't bought again. And then they moved the Bitcoin. SpaceX moved the Bitcoin from one wallet to another. And people were like, no. They're not going to sell their Bitcoin. Of course they are. Of course they are. And so we are in a US debt doom loop, according to Ray Dalio. But we're also in a doom loop for all of these companies that are getting massive valuations at all-time record highs in the midst of the end stages of a bull market. How do you think that's going to end up? So this is very important in my view. The fact that we know and we can learn from the previous cycles, and we can learn from the price movements of the previous cycles, right? We saw internet computer going from these incredible highs, basically 99.9% drop in just a few months. And that was at a launch with almost no technology. We have all of these companies that do have technology, that do have use cases, that are being implemented in TradFi, right? Traditional finance, that are interoperable, that are being accepted by regulatory agencies and businesses around the world. But that doesn't mean that we're not going to have a drop from where we are in the price narrative. But the focus should be on the technology. What are they creating? What have they created? What are they looking to create? What is the vision forward? Because it doesn't matter what happened in the last cycle or the cycle before that. People are still going to be complaining, oh, but Cryptoviser, I should have bought at $1,000 Bitcoin. It's like, okay, but you didn't. So let's move on, right? Are you going to buy now at 118,000 or are you going to buy at 180,000? Because you're still thinking about that $1,000 price that you should have bought 10 years ago. It's not going to do anything for your portfolio. The same way that taking a loss and moving on from a bad investment an investment that didn't work out, it's going to clear your mind enough so that you can move on to the next trade. Because if you focus on that losing trade for too long, you're going to miss the other opportunities in the market. And so this goes across the board. It's not just internet computer. It's not just Bitcoin. It's not just Ethereum. It's all the cryptos, and not just cryptos, but stocks as well. Anything that you are investing, you have to be okay with losing. And if you're not, you shouldn't be investing in it. Because the risk reward profile, like it's the same thing. Like if you go play the lottery, the likelihood you're going to lose is high. The likelihood you're going to win is low. In crypto, generally speaking, over the course of time, the likelihood that you're going to win is much higher than the likelihood that you're going to lose, at least up to this point. But people still are losing, and they focus on the losses instead of refocusing onto the wins. And the point is for the wins to outweigh the losses. And if you can do that, you're a good investor. But most people won't be able to, because they're going to get caught up in the FOMO. They're going to say, I got to buy internet computer when it's at $500, even though the Cryptoviser is saying wait till 100. I mean, I was talking about an 80% drop before I would even consider internet computer. And then it did the 80% drop, and I said, nope, it happened too fast. Let's wait a little bit longer. And we kept waiting from $800 to $3. And then we won, because we went from $3 to $20. But there's still people out here that say, but Cryptoviser, internet computer, is not performing. I've been holding it for 5 years and I haven't made any money. And it's like, how the hell did you do that? So anyway, hopefully you guys enjoyed this kind of conversation and video. Again, I am a firm believer in you own your trades. So if you're investing in something, you need to understand what you're investing in. And if you lose in that investment, the only person that you should be blaming is yourself. But you really shouldn't even be blaming yourself. Move on. Move on to the next trade. And make the next trade even better than this trade. Every single trade that I make that is a loss, I go back and I say, why did this lose? What did I miss? Could I have sold at a higher price and I just got greedy? Did it just underperform where the tokenomics messed up? Like, what was the reason that this didn't move the way that other coins moved? And I think that we do that and have this conversation regularly on the channel. We talk about Solana all the time. Why is Solana the best performing asset in this cycle outside of Ethereum, outside of this, outside of that? I mean, there are reasons behind it. And if you understand those reasons, you could even become bullish on Solana. But you have to be able to reflect on those trades and be able to identify, like, what can I do better next time? But instead, there's people who are just going to sue and say, it's Dfinity's fault that I lost my money. And it's like, well, if they were moving tokens on the market, you should understand and you should be questioning where the tokens are coming from that are on the market in the first place. But most people don't. Most people don't even know what the maximum supply of their coin is, or what the inflation rate of the coin is, or the burn rate of the coin, or how many coins are even in circulation. Most people don't even know that. Even about Bitcoin, they'll say 21 million. That's not the actual number. The number is about 20 million. There's 20 million in existence. And people say, but Cryptoviser, what about, all the coins that are lost forever? What about them? They're still in circulation. They're just not accessible currently. Maybe they will become accessible in the future. Maybe they won't. But even if they won't, 15 million coins is still a lot of coins in existence. And people are saying there's going to be a supply shock. It's like MicroStrategy has been buying billions and billions and billions of dollars, and there's no supply shock yet. When is the supply shock coming? Don't worry, Cryptoviser, it's going to come. It's like, you're not even questioning the narrative that you're talking about. That's not a way to invest. But on this channel, we talk about ways to invest, good investment thesis and strategies. What I say is financial advice. These are just my opinions. I could be wrong. Make sure you guys are subscribed. Let me know your thoughts down below on losing a trade. And would you sue the token issuer like Dfinity, saying that they lost you money? Or would you just move on to another investment? Let me know down below in the comments. I'll see you guys on the next video. Invest responsibly. Do your own research. And as always, crypto on.